All right, welcome back. We continue our analysis looking at what happened afterwards. So, like our previous video, we showed this was a third candle that we wanted to close so that we'll find our next bearish entry. Following that, there is a correction ongoing, and we are believing that the market will have to continue and finish the correction. Okay, so we had three entry prices here that we were watching out for, but we decided we are not going to place any pending order until we see the final outcome. So since we are not placing any pending order, it means that we did not take our entry at the first price here, 1.2282. Neither did we take our entry on the second price here, which is 1.2286, and neither did we take our entry from the third price here, which is 1.2294, right? All right, so we didn't take any of our entry. The stop loss still remains above 1.230. Yes, 1.2308. So why that stop loss still remains the same for any entry we are going to take here, we might have to reconsider the stop loss if we did not enter based on any of these three candles. Okay, of course we have not entered based on any of these candles, so we are looking for the outcome of this, and that will mean that when this impulse that has successfully formed gets terminated, our entry, let's assume that this candle ongoing will become the termination candle of this impulse, because we have just 8 minutes to go. So it's very possible that this could become the termination candle of this impulse. Our stop loss will be above the high of this candle, and you see it's very close to this previous stop loss, and that of course keeps it at the possibility that the market will turn from here, because it's a bearish market and all the stop losses are coming down. Notice that the stop losses are coming down. The stop loss has not broken the previous stop loss, right? So from placing a slab here, if this becomes a termination candle, our stop loss will be at 1.2304. 1.2304, that will be our stop loss. Then our entry will now be based on the third candle principle, or the fourth candle principle, because second candle principle will not work. Looking at what is happening here, you already know what is possible or not possible. It's near impossible for this candle to turn into an engulfing candle, engulf one and two candles, right? So which means that second candle principle for sell will not work, right? Then how about third candle, which will be our entry candle? We might not decide, okay, since third candles or entry candles always go against the bias of the intended entry, we will now wait for the fourth entry candle. Now, the danger of fourth candle entry is that most often the fourth candle entry will be too far if the third candle actually moves in the impulse to create an impulse, right? So if the third candle creates an impulse, the fourth candle will be too far. In that case, it will widen the stop loss. But if the third candle, which is the supposed correct entry candle, does not create an impulse but goes to form a fragmented move, right? That is when the fourth candle will become the ideal or candle with the lowest risk involved. So now we have two things we are watching for. First is if this closes as it's currently looking, closes as a termination of the ongoing impulse, or the impulse here is still ongoing because this has not closed yet. Unless this closes bearish, then this impulse will be terminated. So if this closes as the termination of the ongoing impulse, then we'll have to take our entry on either the second, or rather the third candle or the fourth candle. It will not be the second candle because this is likely and nearly impossible to make an engulfing candle before the time, which is just 5 minutes, expires for the next 1 hour candle to form, right? So it's the third candle we'll be looking at. We'll not be bothered with the second candle, no matter how long the second candle becomes, okay? We'll not be bothered. And also, no matter if the second candle will become a bullish candle, we will not be bothered. That will be repeating what happened here. Notice what happened here. This was the termination candle. This was the second candle, right? Which we will not be bothered about. So even if it becomes a bullish candle, we know that we can always enter on the third candle, which meets our criteria, or the fourth candle, where the third candle does not close below the exit price line. So right now we do not have an exit price line because this ongoing candle has not closed. When it closes, its closing price will become our exit price line. Then the third candle, which will be our entry candle, we will see if it closes below the exit price line or opens below the exit price line, as the case may be. So wherever it opens and closes will determine our entry. So if it opens below the exit price line, we are going to take that entry straight up, right? But if it opens and closes below the exit price, above the exit price line, since we're expecting a sell entry, then we are going to wait for the fourth entry candle or the fourth candle and enter on it. So we have 3 minutes to go to watch the outcome of this current move, to also draw our exit price line unless this impulse continues and this fails to be the termination candle or exit candle. So while we watch, remind ourselves again that we are trading in the week of correction. Okay, so each week there is a major expectation. You could be trading trend, like in this case, we are trading trend. This was the starting of the trend because we had our consolidation box from here. Notice it. Consolidation box, expansion downward and trend upward. All right. So in the trend, we're trading. Trend ended with an impulse, which took us all the way up here. That is what happened this week. Then this impulse ended with a distribution, which distribution always takes price a little above the stop loss of that impulse break. Okay, then gains momentum from there to give us the correction we're expecting. So we are not in the trend week. The trend week was the previous week. We are in the correction week, and that is correction of impulse. And we have stated that the correction will end only when the total impulse move is what? Overshadowed or recovered. And that total impulse move, if you calculate it, will be near 50 to 60.8, 61.8% of the trend move. And remember, that is a retracement we are talking about. So we are looking at the current retracement levels. Even though we are not using any Fibonacci retracement tool here, we can use our common sense to understand where retracement should end. Is that not so? So by looking at the total impulse move, I will know that correction, which is also retracement, is going to end about the ending of the total impulse move here when the market recovers it. But so far, the market has not recovered to the end here. So, which is why where the market currently is gives us an opportunity to take an entry that we might likely hold until the end of impulse. And it also informs us of our entry bias. Right now, every entry we are looking for in this correction move, because the impulse was bullish and the trend was bullish, is a what? Bearish entry. So we are looking for bearish entries supporting our correction bias. Our correction bias, which is bearish, makes us to look for only bearish entries. We ignore every bullish entry opportunity we see, no matter if it is at the breaking of a previous bearish impulse, because those are short-term runs. We avoid them. We are looking at long-term profit. Now there's another benefit. The market has closed, and we already see that that closing, because it's 5 p.m., that closing was definitely a termination of what? The ongoing impulse. So that done successfully, we are going to go to look at that. But while we are reviewing how the market has moved, let's notice that there is also a good reason why you would want to know, having known the week's projection, you want to hold your position, okay, to get to the end. So let's calculate, if you held your position to get to the end, how much of a profit would you have been looking at for this week? So we are looking at from the termination, which is the exit candle here, to the entry candle here, which is this candle. First entry candle hits stop loss. So second entry candle comes after this engulfing candle formed. Okay, so this was your next entry candle. Yes, even though it was above here, it's still a valid entry candle because of the engulfing candle. Since if you are looking for the next entry candle that goes below the exit price line here, that would have been this candle here. Okay, but we are basing our entry on this candle here. Even this also would have been an entry candle too, because properly when a string forms, the third candle becomes your entry candle ordinarily. And you see it means that condition for entry candle, it goes against the bias of entry ordinarily. So we are calculating from here based on engulfing pattern. This is your entry price 1.23910, and now we say our exit will be at the total recovery of impulse, right? So 1.23910 all the way to where 1.219, that's 200 pips. So the benefit of doing the long-term projection and taking an entry to hold down to support your projection is just too amazing. You make so much profit that if you broke it down just the way we are doing, breaking it down to simple impulse break for the next entry, you won't be able to make that total move. Okay, so holding for the full week, which is now what we call not just intraday again, but swing. So holding as a swing trader will give you more profit than holding or playing as an intraday trader. You notice that as an intraday trader, when we took an entry before the day end, you see that the impulse here was broken and you have to exit because you're an intraday trader. Again, as an intraday trader, when we find a new string forming, such as an impulse starting, you have your entry on the third candle and again exit on the same day. Okay, that's an intraday trader. And it continues like that. Wherever you see an entry, you exit when that impulse is broken. That's an intraday trader. If you add them all up, it's not up to what you are expecting for the total week, right? But in another way too, is very favorable because even if the market doesn't make the total move you are expecting, you would have already booked profit that you will withdraw for the week, which is why rather than us doing one entry to hold for the full projection, would recommend taking the intraday strategy more seriously than going forward the swings. All right, so and intraday favors also our traders for the fast trade fair because we have 5 days to trade for all our traders or terrorists who are learning to trade with us, OTC, that's over the counter, to actually bring in their business capital and make profit from it that covers for their projected profit for the month from sales of product. So we are giving them the assurance based on what we have also shown here that if your capital is brought on board for the week of our fast trade fair, you have the guarantee of making profit and you cash out before the end of the week to go back to your business with your capital. So no loss, no risk at all. So that brings us back to the market. So what are we expecting for our entry? We now know where our stop loss will be. New stop loss will be, it's also a support of what we have looked at here. Okay, our correction move is still continue as bearish. So we will first of all draw our new stop loss mark, which is drawn just above, yes, just above that exit candles high. All right, so this is termination or exit candles high. So the new stop loss will be 10 pips. All right, 10 pips above this. Now you notice that because we now have two stop loss here, this entry here is still protected because market we have to break the stop loss here to break the stop loss here, right? And this is lower than this. And if you look at all the other stop loss levels, you see that this has been a bearish. All these slabs here are stop loss lines. This is bearish. So lower high going to lower highs, right? And lower lows. So you can see here lower high or lower lows, and none of them have been broken so far. So that is the direction of market, and it's good to understand the direction of market. So now, when are we going to take our entry? Already, we have shown that we can take our entry based on having seen the stop loss mark here. We can take our entry where we can take our entry on the third candle because the second candle entry's principle was not met. Okay, So we are not looking at entering on the second candle. We are looking at entering where? On the third candle or on the fourth candle. All right. Then because this entry has been protected by stop loss, okay, we can just say we'll place a pending order here just in case we are not watching the market, and that this is the last place we want to see an entry. Otherwise, third candle, wherever that third candle comes from. Okay, we have not drawn our exit price line. So let's move the previous exit price line to the new exit price line. So first of all, let's show where the previous exit price line was. On this candle that broke this impulse, the termination candle's closing price was the exit price line of the previous impulse. Now we have a new impulse. We are not going to look at this again. We are going to look at the new impulse. Okay, termination. So that gives us our exit price line. We move this horizontal line down to that exit price line. So this is a price line. We are going to make use of it when watching our fourth and our third candle. That is, since the second candle clearly is doing the right thing, staying below the exit price line, it means that once the third candle opens below the exit price line, we're going to enter immediately. All right. But if the third candle, which we know always does that entry thing, it goes against the bias of your entry projection, then it means that we will wait for the third candle, rather we wait for the fourth candle, okay, and that might make us enter at a higher price above the exit price line, because we cannot miss the second, third, and fourth candle without taking an entry. So the last place to take an entry will be at the fourth candle. That explained. We now see that we say since we may not need wait for all of these moves to play out. We can just anticipate our entry. There are two places here we can anticipate our entry based on what we have seen here. We can place an entry on still this previous price based on we have seen what has happened here. We've seen the stop loss level, know that it's safe, and we can also place our entry at this exit price. Okay, so where and where should we place our entry on pending order? This pending order, not market execution. While on the right thing to do on market execution is at the third or fourth entry or fourth candle. So the third candle will enter if it opens below here. Okay, then if we are using the fourth candle principle, if it doesn't open below here, which is the easy price line, but opens above it, it means that we are going to wait for it, okay, to close, so that if it closes in the usual way entry candles close against the bias, we wait for the fourth candle, which would now give us an advantage to come very close to the stop loss. So in case the market goes to stop loss, we have just small risk on us to bear. All right, so that having stated, we have come to the end of this session. We can just take the entry we have talked about here, which is the highest price here we are going to use for the entry based on the new stop loss is 1.2294. This is not certain to open, but we'll place it because it's very safe. 1.2294. Let's place that entry. 1.2294. Okay, let's see. Trade 1.2294 for demonstration purpose, of course. Sell limit 1.2294. 1.22940. Then our take profit, we are just putting this to anticipate the end of correction. So 1.21894. Okay. Then stop loss, we'll still use the same stop loss of the previous entry that we are basing it on, which is 1.230994. So that is it. We are just placing this entry to hold it just in case we are not observing when the market makes all the move. Otherwise, we know that we'll come back to observe the market in the next 1 hour and or the next 2 hours. So this shows that there is no serious stress on you as a trader when trading in the fast trade fair, because you observe analyze and wait for your entry rules to be met, then you take your entry on that. So since you are not waiting or stressing yourself out, you know that you can just place your entry as the conditions for your entry are met according to your rules followed. So you learn the rules and you start trading confidently in the fast trade fair, and you are guaranteed of making your profits every week. So if you have come with your business capital, then it is time for you to have your account funded, verified before funding, of course, created before verification, of course, and so linked up with your chatting software after that. So we are having issue with network. We can do this on another demonstration. Thank you very much as we look forward to having all those who are joining us at the Fast Trade Fair register for the Fast Trade Fair and come on the day of arrival. After registration and payment of registration fee, you get your invitation to come for the Fast Trade Fair every month. So if this is not the first time you're on the Fast Trade Fair, you are going to repeat the same result you have experienced with us by coming again. And this puts you at an advantage point because your business capital can give you more profits before you restock. So if you have sold your stock for the first 2 weeks, you know that you now have the turnover to use for the fast trade fair. Trade in the fast trade fair to make the projected profit for the month in 5 days, which is Monday to Friday. Return back to your business on Saturday, and then you have the opportunity to use both profit and capital to buy more inventory for your business. So in this way, the fast trade fair is helping your business. This is particular for those who have business that have goods in stock above 500K, and also those who have total goods that is the 500K and make their monthly projection to sell up to 20% of their stock goods. Thank you.